It's a brilliant, brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. So we get all of that, all in one place, in Singapore. What more can you ask? See you at TOKEN2049.
Hi, Warriors. I'm Dale Pinkert. Good to be back with you, and I have the good fortune of being able to someone I met 3 decades ago that doesn't remember me. But I guarantee you this, Rick, you'll remember me after this interview.
I look forward to it, Dale.
All right. So Rick Rule of Rule Investment Media, and you can find Rick on X at Real Rick Rule. And it's great to talk to you, Rick. You know, I remember from back in those days, you were also in natural resources and the miners. And so you have wisdom and experience. We're all still learning, but you've seen several cycles being around like you have, like you and I, dinosaurs. Where do you think we're at right now? The market got recently rattled hard, especially tech. Really had a pretty big sell-off in NVIDIA, the poster child for happy days are here again in AI. And the market's trying to recover from the bloodbath on Monday. Was this a financial earthquake? And all I have to say is, you see this chart here, Rick? The VIX. Okay, welcome to Real Vision today. You have the Real Vision if you see we trade at 64. And I was thinking of using this for a book cover and call it "A Broken Clock is Right Twice a Day," and that's enough. So does it show how fragile the state of the markets are, Rick, that a 10% sell-off could generate this type of fear level in the market?
I think it speaks to a lot of things. I think it probably speaks to the leverage nature of many people's participation in the market, which is to say volatility spikes when people's fears are grounded in reality. Think about how real those fears might be. Think of yourself, as an example, being one of the large trading banks with $40 trillion in on-balance sheet derivatives. Everything is fine as long as the counterparties pay. But if the counterparties don't pay, you begin to have an issue. Think, too, about all the retail holders who have margin debt. When things get offside, if you have margin debt, you don't make the sell decision. The margin clerk makes the sell decision.
That's right.
I've been, frankly, very incredulous as to why the VIX, why volatility in the market has been as tame as it has been, given the fact that I think that there are a lot of underlying pressures on the market that would make it more volatile. As an example, the economy itself, I think, is in much better shape, at least for rich people, than people think it is. That's bullish. The advances that we've seen in the applications of technology have generated real wealth with less capital. That's bullish. The debt and the deficit are unsustainable. That's bearish.
Okay.
A lot of the market performance has been market performance with no breadth whatsoever.
Well, that was what was supposed to have happened a couple of weeks ago when the Russell had a record day. What a fish hook! But this was really the unwinding of leverage of the yen carry trade, right, Rick? People would go out, they borrow yen, 0% interest, and buy assets. So
I think that's very true. You misunderstand the importance of the marginal buyer. It's not like a market is driven by 100% of the buyers and 100% of the sellers. Markets are driven on the margin, and the unwinding of the carry trade among institutional investors had much more impact, as you wisely have pointed out, than people thought it would.
Okay. All right. So with all of this going on, people have been looking towards precious metals as a haven. And when you have days like we had yesterday, you don't sell what you want to, you sell what you have. And we had a pretty good decline in gold. It's been struggling here lately. To me, Rick, technically, if we take out 2360, I think there's going to be a back up the truck buy entry in the low 2200s. Do you have levels that you're interested in being a buyer in gold? Or is it like a lot of gold guys, don't wait to buy gold and wait?
Well, I've already done the latter. I began the
Right.
systematic purchase of gold in 1998.
Right.
And a financial planner who looked at my portfolio would tell you I was stupid to own any gold. I'm the largest shareholder, as an example, of Sprott Inc., which is a brand name for gold investment. If gold does well, Sprott should do very well. I own gold, however, because I'm an old man and it helps me sleep nights and stay calm. I add to my own gold portfolio during periods of time when gold experiences substantial weakness. I don't have to I don't have to buy at any price. Whether or not 2200 is the right level, I just look for charts like the chart you just showed me. I look for charts where assets that I want to own are in total disarray. That's how I do it. Very unscientific, but Dale, it's worked for me over time. I should comment too about the NVIDIAs and the things like that in the world. I invest in natural resource-based businesses, and I invest in conventional financial service businesses, banks, insurance companies, investment banks, asset managers. I do that because those are businesses that I understand. If I don't think I understand the business, I won't buy the stock. I'm one of those guys who believe that you make money by exploiting the delta between the price of something and its value. That presupposes that you have the ability to analyze the value. The consequence of that is that when people ask me broad market questions, I don't have to feign ignorance. I am ignorant. I don't know the value of NVIDIA. I don't know the value of Microsoft. And the consequence of that is that I'm not tempted to buy them at almost any price.
Okay.
You want to unfuck your shit? This is live.
Yeah, that's being recorded. Hey, listen, if you want to unfuck your future, then come and join us in the Real Vision community. Incredible platform, amazing content, some of the smartest people in the world, and amazing tools. And guess what? It'll cost you nothing. Come to realvision.com. I'll see you there, and let's help you unfuck your future.
All right. So when you're looking for value in miners, a lot of people say it's very important to know who the jockey is. And someone who has a track record like Pierre Lassonde, is that a very important feature of companies that you buy, that you have to know who the jockey is and you're betting on the jockey?
As you go further down the market cap trail, absolutely. I would say below $1 billion market cap, the jockey is more important than the horse. But it's interesting, Dale, that you mentioned that, because when you look at some of the larger companies, what you find is that CEOs that are competent with long duration outperform their peers, even in large companies, over a period of time. If you look, as an example, at Franco-Nevada, not just the initial investments that they made in the royalty and the Carlin trend, which were magnificent, but also the redeployment of capital, what is called the recycle ratio. The amount of ounces of gold that they can buy from the margin of the sale of 1 ounce they produce has been spectacular. If you look too at the corporate culture, which is to say that they run the entire company for 11 basis points. That lesson is transferable too. If you look in the oil and gas space at the 2-decade-long outperformance of ExxonMobil relative to other large oil companies, or in the gold production space, the 3-decade-long outperformance in capital allocation at Agnico Eagle relative to its peers, what you say becomes very true. In addition to the hard statistical work that you have to do with balance sheets, income statements,
Right.
and resource statements, you have to look at the capital deployment allocation decisions by the CEO, provided that the CEO is still with the firm and young enough to continue to make a difference. So,
Okay.
very valid point. Thank you.
Okay, looks vulnerable to me.
In the near
On the
term,
weekly
probably
chart.
is.
Yeah.
Yeah.
Okay.
Yeah.
I'm just, and I'd like
I'll
to
have
ask
to
some
defer to
questions.
you.
What's that?
I'll have to defer to you.
Okay. Back over 130 would look a lot better. And that's what I want to ask. A lot of people, bought miners. Here's a pretty good example. Most of them rallied real big from March, right? We had this nice March rally. And a few of them, what's wrong with First Majestic? Would people ever call in and ask you about it? This has retraced almost 100% of the gains. I mean, compared to something like an Endeavor, where it's, still a pullback, or Fortuna, where it's still a pullback, well above the lows for a year or so. What's wrong with this stock? I'm wondering why it's given up. Is it bad earnings or not making money even after that silver rally?
I would say that the challenge with First Majestic is that they made an investment decision some time ago to buy Jarrett Canyon.
Okay.
At Jarrett Canyon, they haven't yet been able to throw enough cash, love, and attention to prove that they can make that mine work. So really, three bad things are happening. By focusing on turning around Jarrett Canyon, they're having to neglect some of their other operations. The market has a concern that they will ultimately be unsuccessful, and at the same time, they're experiencing operating losses there. Should First Majestic be able to turn around Jarrett Canyon, should they be able to affect the same changes that they affected at San Dimas, you will see the stock do well. But there is no indication so far that they have unlocked the mysteries of Jarrett Canyon.
Okay, so, Steve, I found the best investors and traders are not lazy. And that they spend a lot of time in research and looking into things, and their man hours, traders, they call it screen time, whatever it is. I would say that you spend a great deal of your time, and you're passionate about, looking for the, the rough diamonds out there that people don't see. That's hard for an individual retail investor to do, isn't it?
Probably easier than you think.
Yeah, really?
But the investor has to do it.
Right.
This will sound like an unblemished commercial, but I have 200 hours of instructional material
Okay.
at the Rule Classroom. Somebody who wants to learn how to do the work can learn how for free, but they have to do it. Individual investors, too, think that they don't have access to information, when in fact they do. If you call particularly a small company and ask to speak to the CEO, if he won't speak to you, he's told you something. He's told you that he doesn't want to lower his cost of capital by attracting investors. The truth is that in my recent conference, I interviewed 52 exhibitor CEOs before the conference, and 52 of 52 said in the interview the correct place for a retail investor to get information about the company was with the CEO. You need to understand that a passionate CEO doesn't care about politics. He doesn't care about baseball. He doesn't care about popular culture or movies. He or she cares about their company. If they don't want to talk to you, it's because they don't care. And they've told you something valuable, which is to say you should discard them because they don't care.
Okay, so should we discard every company that employs an investor relations department?
The investor relations department's job is to do outbound communication.
All right.
Among other things, I often call the investor relations department to set up an interview with the CEO.
Okay.
They can provide a useful function. They don't always do so.
Okay. All right. So why don't we talk about what a lot of people are crying about? I went through X, and people are talking about how much was given back on the uranium trade. And I pulled up a few, and to me, the damage, I'll pull up best of breed, be Cameco, right?
Yep,
Would you consider them best of breed?
I would.
Okay. So pretty good break. Probably the lower cap ones got hit harder, right? Like here's an ETF. I don't know if it looks worse or not. About the same. And here's Denison. Do you like Denison?
I can't own Denison because they're trying to employ a technology in the Athabasca Basin at depth in situ leaching that I don't know if it'll work. Denison feels to me more like a technology stock than a uranium stock.
Interesting.
If it works, the chart will look very different. But I hate that word "if."
Yeah.
So I don't own Denison.
Okay. All right. Just asking. And is this supposed to? Because I've talked to people about the uranium market before, and Sprott quotes it, but during the interviews, it seemed like physical really never trades. That the quoted price is based on maybe there'd be a trade there.
What you say is very interesting. People pay slavish attention to the spot price because it's easy information to get hold of, but it's increasingly information of less value. The screen that you have up, the Sprott Physical Uranium Trust, does more volume on a daily basis than uranium does at spot. One could say that the Sprott price is the new spot price.
Like that.
In effect, the important information in the uranium business now is the term market, the private contracts entered into between uranium producers and uranium consumers. That market, however, is opaque. The companies aren't required to release price, volume, and time information to the market. So the uranium market has become very, very opaque for precisely the reason that you have suggested. The spot market, which is the frame of reference for the market itself, is very tight and very illiquid, and the market is dislocated. The second thing about uranium is that the uranium market waxes hot and cold. When the uranium price has to go up, that is to say, when the market ought to be most bullish, investors don't care. After the price of uranium does go up, the fact that it went up justifies the narrative, and people pile into the market at the top, only to lose faith and to sell.
Is it a true correlation that higher other energy prices are constructive for uranium because it really is an energy play? So if WTI, which has been in a fairly severe bear market, is under pressure, that it takes some of the buying pressure out of the uranium market?
From a fundamental point of view, only in the very long term. From a market viewpoint, from an emotional viewpoint, what you say is absolutely true. People look at uranium, they look at coal, they look at alternative energies, and they lump them all in the energy basket. The truth is that they don't actually compete with each other very directly, but that doesn't matter to most people. Most people's investment thesis is got a hunch, bet a bunch.
I like that. Do you know that, I've talked to Jack Schwager. Do you know who he is? The guy who wrote Market Wizards. Anyway, he said that trading is the only business or investing where people feel they could read a book over the weekend and be ready to go Monday morning. It's like brain surgery. Could you read a book about brain surgery and go into the operating room on Monday?
Well,
and
perhaps the only reason I've been successful is the low capacity of my peers.
Yeah. Do you play off sentiment and what you read? Is that I know I feel uncomfortable when I have too much company and I'm hearing a lot of agreement. I'd rather have the other pushback coming at me on a lot of my trades. How about you?
Dale, so true. I look at sentiment partially as reflected by charts. The chart that's the most appealing to me is either a crash or a boom. When stuff has positive momentum, I'm a seller.
Right.
When stuff has extraordinary negative momentum, I'm a buyer. It's very odd to me, Dale, that when your listeners go out to buy physical goods, say cans of tuna fish or a winter coat, they're pretty good shoppers. They look for value, they look for sales. When people buy financial goods, however, they call sales bear markets. They're afraid to buy stuff cheap, and they're afraid to sell stuff that's dear. I've existed in the markets for 40 years. My first 10 years were spent like they were. I've existed in the markets for 40 years, taking the backside of those sentiment trades.
Okay, well then let me ask you this. Are you married, Rick?
I am.
All right, well then I probably shouldn't show this to you because this is called the Widowmaker. All right?
Yep.
I wouldn't want that to happen. But natural gas historically, here's one that fits the Rick rule type of investment that, we're talking about before the recent rally from $1 that we were at maybe 20-year lows on that gas. Will Europe have another warm winter? Is Russia going to play nice? Isn't that historically cheap? What do you think?
Absolutely. And because I, as an investor, think in 5-year terms, I'm completely unconcerned about what might happen in the nat gas market in 2024.
Got you.
So
it could make a new low, and to you, that wouldn't be, well, maybe I should rethink it. To you, it would be, well, if I liked it here, what a great place to add on.
I'm buying productive capacity that'll have a 30-year tail.
Okay.
And so for me, the difference between $1,000 and $1.50 1,000 doesn't matter much. I understand the reasons that natural gas is so cheap. I understand, too, which Congress will never get, that the cure for low prices is low prices. And the cure for high prices is high prices. I look for commodity prices that are unsustainably low. I look for commodities that are priced below the cost of production, because in that circumstance, either the prices go up or the commodity becomes unavailable to humankind. Natural gas is the perfect market for me. I don't buy natural gas itself, but rather I buy companies that are cash flow positive at current low prices, which is to say companies that outcompete their peers, that have 10-year or 20 years or 30 years of reserves to take advantage of the inevitable rebound in natural gas pricing. And this is, as you suggest, for me, a target-rich environment, Dale.
Okay. Well, could this be another target? Joseph of biblical days is my hero as far as a commodity trader. He had the same style. He was buying wheat when it was in abundance and stored it and had it there when it was necessary. So are agricultural commodities on your radar? They're more weather related. They're not, you could have a drought, not be able to produce. But I have to think with the dollar turning and exports that may begin to get better in the U.S. because of a weaker dollar, that agricultural commodities might be a steal down here.
I tend to focus more myself on markets where the supply doesn't change year by year.
Okay.
And I tend to focus, too, on the means of production rather than the commodity.
Okay.
So I am...
the weather would make it not your style.
Yeah, and I'm an owner of farmland rather than an owner of commodities. And as an owner of farmland, I am more inclined to permanent crops, things like apricots and almonds, than I would be to crops where you can change supply by increasing the amount of acres planted or by the inputs of fertilizer. In other words, I'm a longer-term investor rather than a trader.
Okay, so if I blew up, I could get a spot on the farm as a tenant farmer. Rick Rule's farm?
You and I are both a little old to be stretching fence, Dale.
Anyway, I just wanted to have a little backup. I'm not blown up. So anyway, let me ask you how currency comes into. I know you're. Let me guess. I mean, who cares what fiat is stronger or weaker? It's all crap.
Well, I I maintain a lot of liquidity, Dale.
Okay.
I do it because although I believe the real yield in every fiat currency is negative after the deterioration of purchasing power in that currency, I think I have to stomach negative real yields to have what I call an option premium. If I have liquidity and there's a real liquidity break in the market,
Yeah.
and at businesses that I want to own, or at least their shares fall by, say, 50%, if I have the means, the liquidity to take advantage, and I have the courage, I can take advantage. My single best investment year in my career was 2009, coming off 2008.
Being in cash.
I had the ability. I was able to, when everybody else was afraid at the end of 2008, I was ready, willing, and able to push the button. And the consequence of pushing the button was that 2009 was a superb year for me. I have mostly US dollar liquidity because I think that although my real yield in US dollars is negative, it is less negative than it would be in euros, Swiss francs, pound sterling, yen, yuan. You follow me?
No, I disagree.
Well,
Because I think you'd have I think you'd have capital appreciation in things like the Aussie buying it here.
Well, Dale, we
You'd
need to have
have
this.
I think the dollar voted last week, Rick, and it's spoken. It broke down last week. So I'm looking for subpar dollar index. I prefer the commodity currencies, but I think you could see a 120 euro.
We need to have this conversation repeatedly over 5 years.
Well, I don't think it'll take that long.
We're starting a new bank called Battle Bank, which will allow Americans
I saw
to
that
save
in your
18 currencies.
Okay.
Just like Everbank did, our former bank.
Right. So what's the difference between your bank and, I was interested. I got the email. I kind of brushed over it. How are things going? And what do you love about being in that business?
I've been in the banking business for 45 years. And if you can resist the temptation to make stupid mistakes, it's a very good business. The last bank that this team built was Everbank. And they built a $28 billion institution from a standing start. At the beginning of the time that they built Everbank, which, by the way, offered foreign currency CDs in 22 currencies, we're only going to have 18 currencies to start. But at the beginning of that exercise, that bank had a 0 customer backlog. Battle Bank now has a 14,000 customer backlog. So when the FDIC allows us to start business, I think we'll start it with a bang. And we will do it precisely because people like you, Americans, would like to save in euros. They'd like to save in yen. Exactly. They'd like to save in Canadian dollars and Australian dollars. And we give them the ability to do that with FDIC protection.
Nice.
Other major banks do it, but they have they have $1 million minimum for those accounts. We have a $5,000 minimum.
Yeah. It's great to make foreign exchange available to people because if I'm right, just a simplistic Forrest Gump type technical view of the dollar. I like simple. I don't know about you, but simpler, the cleaner, the better for me. I'm not complicated.
I save in US dollars, Australian dollars, Chilean pesos, and Canadian dollars because I invest in all those currencies. So, for me, liquidity in these different currencies is in effect a cost of business. I've been able to affect that for myself. But many people don't want to go through the aggravation of opening a Chilean bank account, a Canadian bank account, and an Australian bank account. So Battle Bank does it easily. You can do it simply with a U.S. account.
Okay. Well, I think we're going for this destiny is 100 par, big round numbers, and take it out eventually. So let me ask you this. I mean, we're headed towards funny time. the election season. And let me ask you, I mean, you're a banker, so you should be able to answer this question. We know that the desire of the ticket of Donald Trump and Vance would like to see a lower dollar. They talk about it. It's a economic plank for them. How I remember things like the Plaza Accord, but that took cooperation with other countries, other central banks. How does an administration, executive branch, and the Treasury engineer a decline in the dollar? Because I think they're going to get it. I'm just wondering how they go about it. How do you think they go about it?
I would argue that weakening the dollar is the thing the government's best at. They spend too much.
Okay. Yeah, it's true. Okay.
Borrow too much.
Okay.
They weaken investor confidence in their ability to sell bonds and pay for them. And when they give a treasury auction that fails, they go to quantitative easing. By the way, Dale, if you did quantitative easing, it would be called counterfeiting, and you would be thrown in the slammer.
Yeah.
But if you were a congressman and did quantitative easing, spent money on your constituents that you didn't have, you would be regarded as a statesman and you would be reelected. So I don't think that Mr. Trump or Mr. Vance or Ms. Harris and whoever it is that she's chosen have any trouble weakening the dollar. I think they'll do it in their sleep.
Okay.
Sadly.
Okay. So let me ask you this: do you believe that eventually the plan to move to CBDCs it manifests in the next few years? And wouldn't it take a loss of confidence in the dollar for the general public to say, yes, give me a solution, and willingly accept it?
I'm tempted to say that they would have to aerially spray Valium or something. The idea that the government could have a currency that you didn't control, but they controlled. You could use it, but it was their possession, particularly where they could cancel the currency if they didn't like the way that you posted on X.
Cancel your availability to it, your access to it.
That is truly terrifying. That's the single scariest idea since Hitler, who decided that he could cancel your person as opposed merely to your currency. I don't know what it would take to make the populace be that stupid.
Okay. All right. So, I mean, it's out there.
Truly scary. The overlay of social credit scoring.
Yes. I mean, it's China here.
Absolutely. And even the Chinese don't have the technological capability right now to cancel individual Chinese savings. Certainly for myself, if I felt that central bank digital currency was really truly part of my future, my gold purchases and my silver purchases would take a decided tilt higher, and I would store that metal outside of the United States, maintaining just enough liquidity to feed my wife and I.
Okay. Interesting, because people do that.
They do.
Okay, they do. Why don't we talk about, we've really covered the whole board. It's been really interesting talking to you. Anything that I haven't brought up that you would like to, talk about? I mean, this era that we're in, it's something that, have you seen it before, or it seems like Rod Serling wrote this and we're living it?
I felt pieces of it before. There was somebody smart, I forget who, that said history doesn't repeat, but it rhymes.
Rhymes, yeah.
And I've seen pieces of this at various times in the future. The thing that scares me a little bit about this time is that we are embarking on the adventure that we're embarking on with government debt at 120% of GDP, rather than at 20% of GDP. In other words, we have this tendency to push string in terms of crisis, but we have less string to push. In 2008, we could in fact debase the dollar because the dollar was so strong. Now that we have debased it, with debt being 120% of GDP, one wonders how much more debasement the dollar can take.
Well, then, yeah. Well, I just based on levels, you can make a case for. I know people thinking there's another 50% to come out of it in the next year or two.
I don't know what the number is. I look at what I consider to be the real yield in U.S. Treasury securities. Most people look at the yield of U.S. Treasury securities by doing the current yield, 4.3, 4.4?
Right.
Against the CPI, 2.6. But I think the CPI is a stupid metric. I don't think it measures the deterioration of the purchasing price of the dollar. Purchasing power of the dollar is an example. The CPI, when it's inconvenient, doesn't include food or fuel. Well, that isn't useful to me. I eat. More importantly, the CPI doesn't include the cost of tax of government. Dale, if I didn't have to pay the tax, I wouldn't bitch so much about the index. But I think that the US dollar, in terms of purchasing power, is declining at 7 or 7.5% compounded. Therefore, if I buy a US 10-year treasury yielding 4.4 in a currency that's declining at 7.5, I'm losing 3% a year. I do it because I consider that loss to be an option payment. But I don't think that that arithmetic is good for the strength of the treasury market or good for the dollar. And I need people to understand the rationale for my market expectations rather than just understanding my expectations. When I look at
we've had a nice little rally in the bond market.
Yep.
It could stretch a bit more, but the trend, the secular trend of higher rates is still in charge.
That's right? For traders, not investors.
Yeah. See, this was the bond crash.
Yeah.
So even though we've had a little rally in bonds, even if we went to 110, it wouldn't change the trend. Is that what you're saying?
Yeah. I mean, I don't own bonds for capital gains. I own bonds for preservation of income. And I look at the long bond as a destroyer of income.
Okay.
If I'm losing 7.5% of purchasing power, the 10-year treasury would have to yield 10 for me to be interested in it. Think what that would do to the principal price of the bond.
Okay. So when does return of investment mean more to you than return on investment?
All the time. You can take away most of my upside if you take away all of my downside.
Okay. Interesting, Rick. So
I'm a banker. I'm a green eye shade guy.
You are. It's almost like, being with one of the originals. So do you think about what's happening geopolitically and where things are going? Is it, something that could be a trigger that changes the whole game? I know that every major recession in the U.S. has started with an oil shock. And you could see the potential for there being an oil shock if anything happened to the supply side in the Straits of Hormuz. Could that happen here?
Yes, absolutely. The continued hostilities in the Middle East could easily result in somebody chucking a missile in the Straits of Hormuz. I'm not saying it will, but if you give me the use of the word could, many of my underlying assumptions give me a little bit of upside around that circumstance taking place.
Okay, so you have exposure to oil shares.
Mostly I have an exposure to oil shares for different reasons. My exposure to oil shares is because the oil industry as a whole, including state-owned firms, is underinvesting in sustaining capital to the tune of about $1 billion a day. In a capital investment, in a capital-intensive business, if you underinvest in sustaining capital, you impair your ability to produce 2 or 3 years out. If you look at PDVSA or Pemex, the state oil companies of Venezuela and Mexico, respectively, production has declined by about 80%, not because those countries are out of oil, but because they diverted the cash flow from their oil business to politically expedient domestic spending programs. The oil shock that I think that we experience happens as a consequence of underinvestment in productive capacity by oil businesses, including state-controlled businesses worldwide. I think that that is a probability, not a possibility. I think the Persian Gulf is a possibility, not a probability.
Okay. So then we're going to have more regs, and you think that what happened politically, that Kamala Harris is going to win the election?
I have no idea. That's bigger than me. If you, well, it's something that I don't know enough about that I have any value of my opinion on.
Okay.
If you ask me who I'll vote for in November, Tweedledum, Tweedledummer, or Tweedledummest, I won't vote for any of the Three Stooges. I won't vote for Kennedy. I won't vote for Harris. I won't vote for Trump.
Yeah. Okay. Because it's tough to open the mind in the U.S.
Very tough.
So if it only gets tougher, it makes what we've just been talking about for the last 45 minutes even rarer.
Correct.
Okay.
Here's an example of that. Everybody agrees that we need lower commodity prices and that we need more electricity. To do that, we need more copper. There is a wonderful copper deposit in the U.S. called Resolution. It's in Arizona, conveniently located next to a copper mine. It's over 1 billion tons, politically secure copper, so-called. The median grade is 1.5% copper, 3 times the average grade mined worldwide. It's been stuck in permitting for 26 years. 26
Because it would take 10 to get it open anyway, right?
Yeah. I mean, this is astonishing.
Yeah. Okay. Anyway, so I tell you what, we've covered so much ground. We've talked about a lot of things. I didn't plan on it. And thanks for going along with me, Rick. I was able to ask you everything.
Well, thanks for the opportunity, Dale. By the way, I would invite your listeners who care what I have to say about natural resources to go to my website, realinvestmentmedia.com. If you go there, list your natural resource stocks. I'll personally rank them 1 to 10. No charge.
I've done that before,
no
Rick.
Obligation. Yep.
I've done it. You get an answer.
It's absolutely free. realinvestmentmedia.com.
And a lot of things that you talked about today, Rick, are priceless. And it comes from having been around the block a couple times. And I really appreciated the time. I think people got a real vision today after hearing me talk to Rick Rule. Thank you,
for
everyone.
the opportunity.
All right. Great meeting you again, Rick. See you, buddy.
I look forward to the next time.
All right. Adios, everyone.
It's a brilliant, brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. So we get all of that, all in one place, in Singapore. What more can you ask? See you at TOKEN2049.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.